Welcome to the New York Outlook for Wednesday, the 29th of November 2023. Looking at the calendar for today, what you can see is there was a bunch of preliminary CPI news for the EURUSD. However, this has subsequently passed, and as you can see, the Euro news was quite bad, and thus EURUSD is expected to go down. For the London session, I didn't trade EURUSD because because of the CPI news coming out throughout the morning. Now that it's all out, we can consider trading it. However, we have to consider the significant GDP news coming out at 3:30, which is about 20 minutes from now. Because GDP is quite volatile often, we don't leave trades open beforehand, and we essentially fade the move after the fact. Jumping into the charts, what I will do is start with GBPUSD. As you can see, we in let's see. Okay, so we are in significant ERL momentum. Presently, the idea would be to target this. We're also in day 5 of the bullish candles. We've recently taken out this daily target with no pullback in the form of a bearish daily candle, and thus, given that this liquidity was taken, we can anticipate a bearish daily close for today, which thus enables looking for shorts as well as longs, and longs remain one of the moves just because of the significant momentum given the scenario that we are in. In terms of the charts, starting from the morning, essentially during London session, we were waiting for the Asia range to be taken out to then determine if we could play further longs, targeting this. However, as you can see, just to mention as well, there was this 30-minute time frame chain which we could consider playing instant executions, because this is an area where low of the days could form. However, the POIs and the Fibonacci's associated with the time frame or with the day in which these 30-minute demand chains formed did not line up, so for that reason I didn't take any of those trades. In addition, the stop loss would be quite large, which would sort of make the risk reward not worthwhile. Subsequent to that, what you can see is the high of the day of Asia was maintained, and the 5 or 15 minutes rather, actually both of them, first the 5-minute took supply to control, and then the 15-minute then took control subsequently, which thus gives us reason to short for the remainder of the day. However, at the same time, like I mentioned, there is also reason to longs, and as you can see, London has made the low of the day, which is good, and now essentially what we're waiting for is for 5-minute demand to take control. And this can happen. Yeah, it's not too far out actually, but in order for demand to take control, we essentially just need a candle body break of this, and then we would validate that 5-minute demand is in control, which would then validate a potential entry in this area. However, we have to keep in mind the London range. We would need one side of it to be swept prior to the entry. Depending on how the GDP news comes out, we'll fade the move. So if the GDP news for USD is negative, then we're expecting GBP to go up, and if it's positive, we're expecting it to go down. If we anticipating that if the news comes out negative for the USD, then positive for the USD, which would support the narrative for shorts based on the 15-minute supply and control, our entry will be placed above the London session high, and would effectively we could cover this or this, but given that there's reasons to trade both directions, it would be prudent to cover the actual high of the day and then we target something related to ADR, which is probably something to that effect. Effectively a 1 to 3 is something I'd consider targeting for today. The overall target is quite far, and this is ADR, so it should be practical to reach for today. That's I guess the underlying point is it's highly dependent on what the news release is, but that's coming out fairly soon and we'll know the answer to that. In terms of Euro USD, since the significant CPI news is out for the day, and we essentially saw that it was bad for the euro, which is why we're seeing this trend towards the downside. However, because we didn't have precise timings for it, it wasn't necessarily smart to consider shorting during that time. Just quickly hopping on the 4 hour, actually the daily. Sorry, sometimes these drawings just go awry when I switch between the MacBook and my desktop. But essentially, yesterday we took out the swing high, and that swing high didn't have its pullback. And what you can see is because this is day 5, we're also anticipating the reversal. So even though we're in a ERL continuation momentum situation, and there's reason to trade both directions, at present, given the Euro news releases, our bias is heavily to the short side. So I wouldn't consider longs for today. In addition, our daily bias supports the short narrative. Excuse me, supports the short narrative, and thus for today in particular, I'd say only shorts make sense. Again, we're waiting for the US news release to come out, and then we can assess how to move forward. Again, what we need to take into consideration is the London range, which spans from here to here. So whatever entry we do in fact take, spans from there to there, will need to be positioned above this level. Until then, for the euro, only shorts are valid. Euro CPI news negative, thus anticipating shorts only. Okay, so that's euro. Just gonna set a couple of alerts, and the ADR, the daily range for the euro is about 70 pips for November, so there is room. We just have to see what the GDP news is, and then we can essentially go from there. But yes, that's essentially my outlook for okay, so that's essentially my outlook for the New York session, and we will chat again for the end of day review.